Okay, so we can take a look at Google on the intraday. So yesterday on the release of the legal challenge that they had against them, they shot up from the close at 211.99, and they were as high as 229 in the aftermarket within 1 hour. They traded off throughout the rest of the aftermarket and were trading off for most of the pre-market, but they seem to be climbing back up at the moment. So let's look at the 1 year daily chart. And this is one I started accumulating back in June.
Nice.
So I've had a pretty good run. They're higher than their 20, their 50, and their 200-day averages, which are all sloping upwards. I think that's going to continue into the near-term future. They did break above a recent high in 2025. By the way, these are all-time highs, these prices over here. They did break above the 208 level back in February before the sell-off due to the tariff announcements. They are in overbought territory slightly. The RSI is at 70.14. Looks like they were a little higher, maybe 78 or so back in July. PPO has been somewhat flat since the end of July. They are outperforming the S&P 500 on relative strength, and it looks like momentum just barely under the S&P 500. Accumulation is at a 52-week high. Let me run this back 2 years and see if that's holding for 2 complete years. Yep, so at a 104-week high, actually. So that looks very strong to me. The money flow has been positive since the end of June, and they're outperforming the S&P 500. Communication sector, they're pretty much even. And the network, internet, they are underperforming that industry group. Let me go back to, no, I am on a year. They are underperforming slightly, and that group is outperforming the S&P 500. So Google's looking very strong to me, and they are undervalued, I think, which you're going to talk about next.
Yeah, I've been saying that for a while. It's not I'm not a Johnny come lately. When we look at Alphabet, just starting off, you look at the PE ratios. If you look at the top 10 most expensive companies or biggest market cap companies, they're all in the mid 30s, except for Meta. Meta is around 30, but you have stocks that are up at 100 PE, where Google is at 22. 21 for next year. And those are really good. That's below the average S&P PE, which is 25, 26. And the stock, I really like this trajectory they have on this stock. I really like this chart. To me, it's going to end up at $300 a share. I think it's going to end up at $300 a share in the next 12 to 18 months. I think it's just going to continue to go higher. When I look at the valuation, it's discounted. It was discounted by, let's take a look at the discount overall. %. If it opens 7% higher, obviously that's going to be more like 17%. And the thing about Google is once you remove some of these stories, right? Okay, you're not going to remove Chrome. They're going to have to share search data, which isn't all that hurtful to Google. The competitors are still going to have to figure out, okay, how do we get users to use our platform? Because the preferred browser is Chrome, and Chrome is everywhere. Like I use it on my Android device. Obviously I use it at home. I'm kind of, unless there's a alternative that is going to give me more features, value, function, why would I switch? It's a browser. And I think it gives them a huge competitive advantage in the AI race, because I was explaining this to somebody. OpenAI, I get that you can download the app on your phone. Got it. So on a phone, I think we're kind of an even playing field, OpenAI versus Gemini. Although Gemini is the advantage on any Android device because Google owns Android, and they pretty much preload Gemini on Android devices. But on a browser, if you want to use an OpenAI, you're going to have to go through Chrome. So it's almost like if you were in retail, you had a retail outlet, you competed against Target, but your store is in the middle of a Target. It gives Target an advantage because at least your consumer can take a look at what they have on the shelves as they reach your store. Not necessarily that much of an advantage, but Google does control Chrome, and that's the preferred browser. So that's good for their AI business. As we operate a few quarters, and if Google can continue to grow top line revenue, I think the other story, which is AI is going to disrupt, take away search. And my answer to that is search was always going to evolve. And right now, I think Google's doing a pretty good job of evolving, using its dominance in search to introduce their AI business and introduce a new, better way of searching for data. So their dominance isn't going to go away overnight. Worst case scenario is they're still dominant for 5 years, and they have to figure out how to remain very relevant and competitive, which I'm confident Google's going to do it. It's a really high intellect, high ability to execute company. They have the resources to do it. So once we get, that story to be more concern than it is reality, I think this stock will really, really work because their growth is excellent. They're massive scale, 371 billion. So when they grow 13%, we're talking about $40 billion of added revenue, added profit, added free cash flow, the proportions to that revenue. And their cloud business is growing really fast. They have Waymo, that's physical AI, and that's real. They have cash they could deploy to be a player in the AI race. So this one here, I'm going to say that, in the next 3 years, 4 years, Google may become the most valuable company in the stock market, overtaking Microsoft, Apple. I'm not sure if Amazon's ahead of them right now, but I expect these guys are going to be a $5 trillion market cap company because their business is set up so strategically. Their assets all complement one another. Chrome complements their AI business, complements YouTube. Oh yeah, YouTube, number one streaming, platform on earth. Friday, they're going to show a football game to all YouTube users. Isn't that going to be cool? All YouTube. So you want to watch football on Friday, Chiefs versus Chargers, you can do it on YouTube. That's going to be great. And then they have their Android. So they have an operating system for handhelds. Well, isn't that convenient? So now they've got that business that's going to help their AI business, which helps their browser business, their search business. Everything's kind of complements one another. And I can go on and on. End of the story is that I think they're discounted, and strategically they just have They have a very desirable, plan for their business. They've been doubted, which is kind of incredible to me. It's like, if you want to doubt a company, doubt somebody who's like failed repeatedly. Like I can't think. I'm going to pick on Macy's, not because I dislike Macy's, but because it's just such a tough business, right? Retail. Yeah, you could doubt Macy's because it's real. Everybody's moving to e-commerce, and you could say, wow, it's really tough to be a retailer these days. I agree. Nobody at Macy's is doing a poor job. It's just the market moved away from retail. But when we deal with Alphabet, the doubting has kind of been unbelievable to some extent to me. I'm like, really? People are doubting Google? Of all businesses, like there's a couple businesses I'm not going to doubt. Amazon, Google. Remember when they were doubting Meta in the market? The market was really taught a lesson back then. All those who sold off on Meta and said, "Oh man, those guys are terrible. Man, the worst company in the world." Or Netflix, or you name it. You have these situations where the market creates this opportunity. That's what it's really doing. It's saying, "Hey, would you like to buy a great business at a discount?" Yes, I would. Okay, well, now that business is worth 709% more over the course of 2.5 years. So not as extreme here, because this just is a lovely chart. But Alphabet, I think, I think the stock price is going to go to $300 a share. And at some point, this thing's going to be competing for the most valuable company on the stock market. So that is Google. Excuse me. I like Saeed's comment, and I agree with it. Google and Amazon are like an ETF. I agree, and it's almost like a very well put together ETF of assets that have reasons to be with each other, especially Google. Amazon is a little more eclectic. They have e-commerce. They have this massive cloud business. They have a streaming business, but they make it work. Like the streaming business is an example. When I first heard they were going to do streaming, I thought, well, that's kind of crazy. It's an e-commerce company, but guess what? We're prime, household. So we got video. And it's like, man, that really worked. They're already getting us on, the platform. Now they have their advertising business, both on their platform, e-commerce platform, as well as their streaming. They started doing football games. So I agree. That's a very good observation. I agree with you, Saeed. They're like a really solid ETF. They're so darn big. Yep. Fabricio, very nice to see you. Thanks for joining us. All right. So we handled Google Alphabet.